It's shaping up to be a busy next couple of weeks in the Forex space with expectations of lower easing monetary policy from the Federal Reserve, helping to create some movement with regards to the dollar index. Meanwhile, the upcoming G20 summit could or could not yield a meeting between U.S. President Donald Trump and his Chinese counterpart Xi Jinping, which could send the Chinese yuan more challenges in the future. So given the fact that there could be a lot of movement in the Forex space, what is the outlook for some of the world's major currencies? Well, today on Forex Friday, we are joined once again by FXTM's Lukman Otunuga to help us lay out the landscape for Forex traders moving forward. Lukman, good morning over there in London.
Good morning. Thank you for having me on again.
All right. So, Lukman, again, we have to start off with a number of interesting comments from U.S. President Donald Trump, where he took shots at the Federal Reserve, saying that they don't have a clue, and also that he thinks that the U.S. dollar is too strong against most of their major peers. First question, of course, is do you agree with what Trump actually said about the U.S. dollar?
I mean, given how the dollar has actually remains king against almost every single G10 currency, excluding the Canadian dollar and Japanese yen year to date, and the dollar still remains quite strong against most emerging market currencies, I understand why Trump is saying this, because at the end of the day, he believes that a strong dollar will make American exports less attractive in the foreign markets, and this is not good for what he wants to achieve. However, I don't think it's fair for him to say that the Fed doesn't have a clue. In fact, I think the Fed probably knows something we do not, and this is why we're seeing a change in their tone. If we look at economic data recently, we saw last week's dismal NFP, inflationary pressure still remains subdued. So we are seeing warning lights that the largest economy in the world could in fact be experiencing a slowdown due to trade tensions. Today we have U.S. retail sales. If it does disappoint, then market expectations are likely to skyrocket over us seeing a rate cut, not this month, next month.
All right, Lukman, so let's look at another set of tea leaves, this time from China. And given the fact that the yuan, everybody is wondering whether or not it will hit or breach 7 to the U.S. dollar, given all of these trade tensions. But PBOC Governor Yi Gang recently said that he doesn't think that any one level is more important than the other for the yuan. I'd like to get your thoughts on what he meant by that and whether you think the yuan will actually be defended or let loose to perhaps be subject to potential weakening by the PBOC.
There is a lot of emphasis over the magical 7.0 level. You could read it everywhere. And the last time the yuan weakened such level was back in 2008. So this is a very, very important psychological level. But at the end of the day, it's the market forces and external forces, trade developments that are impacting the valuation of the Chinese yuan. Should tensions continue to escalate, this may open the doors to 7.0. The question is what happens after.
All right. We're still speaking to Lukman Otunuga, a strategist and analyst over at FXTM in London. And Lukman, we seldom talk about this European currency, but I'd like to bring it up today because there was an interesting article in Bloomberg that highlighted the Swiss franc as being a winner if the Fed loosens monetary policy. Your thoughts on the potential, the winning potential for the Swiss franc if monetary policy starts easing stateside?
It's a very interesting article. JP Morgan said the same thing, how the Swiss franc is the best bet in history of a Fed easing. Now, that's a really big call. We know the Swiss franc is seen as a safe haven asset. In times of recession risks, geopolitical uncertainty, investors tend to rush towards safe haven currencies like the Swiss franc, the Japanese yen, and gold. But I think the really special, the really tasty thing about the Swiss franc is the fact that Switzerland has a massive current account surplus. So when things start to get really messy, in times of uncertainty, the Swiss franc will be the main destination. Should the U.S. Federal Reserve cut interest rates, there is a strong potential for the Swiss franc to trade to really, really shocking levels.
So, Lukman, let's shift our attention now to the British pound again. Is under scrutiny because of the ongoing competition for who will succeed Theresa May as the leader of the Conservative Party. And, of course, the front runner is a Eurosceptic and a hardline Brexiteer, Boris Johnson, leaving many FX analysts wondering if this will lead to even more pressure on the British pound. I know you're a little fatigued talking about the Brexit process, but this is a very interesting turn of events also. Give us your updated thoughts on where this leaves sterling.
Yeah, when we're speaking about Brexit, there is a lot of fatigue. It's Brexit, 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 and it's starting to really hit sentiment in the UK, coming from somebody who's living there. If we looked at economic data earlier in the week, we saw that UK GDP actually contracted by 0.4% in April. So we can actually see that Brexit is biting. Now, interestingly, if Boris Johnson does secure the position of being Prime Minister, this would lead to the British pound being exposed to downside shocks as concerns start to intensify over the UK crashing out of the EU without a deal in place. But I think this is just hitting the surface. You have to keep in mind that the leadership contest is not something that happens overnight. It may end in July, and the deadline for Brexit is October the 31st. So there isn't not even enough time for things to materialize. So what I feel may happen is the UK may actually go back to the EU to request for an extension of the deadline. What the main question is whether the EU will accept this or tell the UK to just leave.
All right, we'll have to leave it there. Lukman Otunuga from FXTM, thank you so much for joining us this afternoon on Forex Fridays here in Primetime.